Need to be a link between where the member lives and the geographical location of the QROPS?
No particular link. There does need to be care, and again, your advisor will take you through this. A good example of this at the moment is the Isle of Man. If you've done a QROPS onto the Isle of Man, potentially there, and then you start taking income, there's actually a withholding tax. Now, you might not be able to recover that if you live in another European jurisdiction, so you could end up paying taxation twice. So it's very important not only to look at what is a good QROPS jurisdiction, but also how that jurisdiction imposes taxes on funds invested within them. But in general terms, you'll find that nearly all QROPS are actually done in a separate jurisdiction to the actual country in which people live.
And why is that?
Largely because of tax, because you're going into a jurisdiction where it's a tax-neutral status. The Channel Islands, for example, on a pension transfer into a QROPS, they won't impose any income tax, they won't impose any capital gains tax, there's no inheritance tax, whereas those taxes are likely to incur, either some or all of them, in most other European jurisdictions.
Do I need to liquidate assets into cash first, Gary, before I then transfer them into the QROPS?
Right. Well, there's actually two facilities. One is exactly that. You liquidate your existing pension fund and then you transfer it over as a cash sum by a direct transfer to the QROPS provider. For people with different types of assets in their pension scheme, now that could be anything varied from a stocks and shares portfolio that they would like to keep, or existing assets like property, commercial property. Many business owners have held property in their pension fund now for a long period of time. Those can be transferred in what we call in specie. So you change the pensioner trustee from the existing arrangement to the QROPS provider offshore.
Once I've transferred, can I get all my money out in one lump sum?
Right. Now, this has been a bone of contention with Her Majesty's Revenue and Customs. So certainly, QROPS schemes were never set up to really what you might see as cashing in your pension scheme. There's an unequivocal rule in QROPS transfers that the company must use 70% of the transferred funds to provide somebody with a lifetime income. Now, that basically means you can't just cash the sum in and go away on a nice holiday or stick the money in the building society or something like that. So the answer to that is no. That there are some very quirky schemes out there that still purport to be able to do that, but I think realistically what you're doing there is you're going against the spirit of legislation, and I'm sure, but by the time that people get to the point where possibilities currently of cashing in a pension scheme might have been available, that they would have been tightened up and removed by HMRC.
Are there any things then, other things that I perhaps should look out for, any potential problems at all?
I think the main one is any tax consequences in the jurisdiction that you might end up in. Now, I may have mentioned before, the Isle of Man is a good example. When you start taking pension income from an Isle of Man-based QROPS scheme, there's a withholding tax, which for many people can't be recovered. So you're getting tax on your pension, whereas in other jurisdictions they'll pay out the income from a QROPS scheme completely tax-free. So you will receive it gross, and then it's your responsibility with perhaps your tax professional wherever you live to pay the according tax in the jurisdiction in which you live.
Once somebody has decided and they've sat down with you and gone through exactly what they want to achieve and what scheme is best for them, etc. How long does it take and how much does it cost? Right,
that really depends in terms of cost, where a person wants to go, what they want to do with their pension funds, how they want to invest it. And the more extreme, shall we say, that you get, generally the more the costs go up. There are differences in QROPS providers between packaged arrangements, where they provide the trust service or the trustee service and the underlying investments, to other types which are very similar to self-invested personal pensions, where somebody sits as a trustee but really allows you to invest the money with a great deal of sort of scope and flexibility in different types of schemes. Timescales can vary enormously. There is a great deal of paperwork. There's the advisory process, which has all got to be written down and made sure that you actually understand what is actually happening. Then the transfer process with your existing pension company, and there's a number of discharge and forms that have to be completed there. But most companies, once all the paperwork is actually in place, will take a few weeks to transfer the monies across. But the whole process, you've got to be giving yourself a good 6 weeks, perhaps even 2 months at the outside, to facilitate a whole transfer into a new QROPS scheme.
It's a complex issue, that's for sure, and of course, in spite of the very comprehensive answers that you've given, which we certainly thank you for, there's a lot more that the individual needs to go through, and of course we're talking about people's pensions, so yes, it's important to get this absolutely right. Financial advice within this whole process is absolutely essential, isn't it?
Absolutely, and what I would say is stick a positive note up for UK financial advice in this situation, because of the regulatory regime that UK financial advisors are actually under now, and the disclosure regimes and documenting things like implicit and explicit charges. So implicit are charges within a fund, and explicit are the ones that you actually sort of see. It is very important to stick to UK financial advisors and ones that have got expertise in QROPS before facilitating this type of arrangement. Do bear in mind that if you're using financial advisors abroad, they're not under the same regulatory regime. They're probably under a regulatory regime which is very, very light touch, and actually getting the details of what you're really paying within a product can be very, very difficult.
Okay, so it's important to speak with a real expert, and as you say, people who are thoroughly regulated. You clearly know a huge amount about the subject. Gary, how come you know so much about QROPS?
We spent a long time as part of normal pension planning looking at all the facilities that are available. Expatriate work has always been of great interest to me, in the various tax regimes that exist not only within Europe but around the world. And we do get asked occasionally, where is it best to go? Somebody wants to go to warmer climates. Where's the best tax regime? Where's the lightest touch in terms of tax? And that might be anything from somebody just not wanting to pay a great deal of tax to somebody who it's very important, but because their pension benefits aren't that enormous, and they need a lower cost of living and more income.
Gary, we've spoken a lot about QROPS and about setting them up, and of course many people are going to be doing this. Once though somebody has set the QROP up and they're living happily abroad, benefiting from more sunshine I'm sure than we have here, is there a need for ongoing advice?
Yes, the ongoing side is absolutely crucial. First and foremost, people are likely to be spending their money in a different currency, whether that's euros or dollars in some sort of jurisdiction. So the advice in terms of whether to stay in sterling, whether to move it into euros, the various investment mediums that are going on, and also the risk. People's risks change as they get older. Somebody may want to take more risks at the moment and are prepared to invest their monies aggressively, and later on in life move to a more conservative approach and have more deposit-type funds in their arrangements. So all of those things must come out as part of annual reviews of the processes, how much income they're able to take from the pension scheme, how that should be denoted in their jurisdiction. Should it be a capital payment? Should it be a payment from the growth or the interest that's actually been received within the pension arrangement? So yes, ongoing advice with QROPS, as in the UK with unsecured pensions, or as we used to term them, income drawdown, is absolutely essential to make sure that the ongoing advice is correct.
And how does that actually work? Because if somebody is perhaps a few thousand miles away, I mean, of course, they're not in exile, as we discussed earlier, so they can come back to the UK, which I guess
Yeah.
some people do. But I mean, much of it can be done over the phone, can it? Or do you go out and see?
There is a great deal that can be done over the phone, but we're in a situation now where in most European jurisdictions we've got many clients, and we come out and see them. As one of the wonders of my job, I get to work in some fantastic locations in the sun.
Well, Gary, thank you very much for sharing the time with us today and taking us all through what is a topic that is going to only generate more and more interest.